Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke, Schein Wealth Management. Thank you for joining us on our Friday Insights edition. Today is December 10th of 2021, and we're going to get into the labor force market. In fact, yesterday afternoon, if you actually watched the initial claim that came out of our initial weekly jobless claim number, it was much lower than analysts and economists expected at 184,000 initial claims. In fact, that number, if you go back in decades, it was the lowest number in initial claims since 1969. Really what that's telling and translating into is we got a strong economy. Again, less people are actually out there participating. And actually, let's go to the labor force participation rate, which has been stubbornly sort of declining since the Great Recession, not even coming back since what we've seen in the pandemic itself in the last year and a half. And more importantly, this labor force right now is actually being deemed over the course of COVID, the last 20 plus months, as the Great Resignation. It's been referenced in Wall Street Journal, CNBC, and a few others. A lot of people have resigned and they're not going back to the traditional workspace, or even we have a lot of older boomers, if you will, basically taking this opportunity to, retire early for health considerations, for, we've been doing it for 30 years plus, here's the deal. We're gonna take some time and spend it with our family and those community, and spend some time in the community and do what we actually want to do versus what you have to do for so many years. So that's not unheard of. We see this from time to time when we see sort of markets go through and economies go through different phases or even recessions. We see a lot of people just retire early for those reasons. In this case, we've seen all asset levels from stock market lift, and we've also seen home prices up, and all across the board, everything's going up, as evidenced by today's, if you look at the inflation rate, the highest that we've seen since 1982. And so as asset valuations and let's say retirement accounts are up there, that then is one of those catalysts to say, wait a minute, I don't have to, looking at my balance and everything else, I don't have to continue to grind it out, if you will, in my job. I can retire early. And that's what we're seeing as sort of the labor force participation rate sort of fall on a declining year-over-year basis. Now, the labor force participation rate, remember, it's those that are actively searching for a job right now. And before the pandemic, going back to 2019, we had an all-time high of 63.5 of the U.S. workforce actually out there working right now. And now it's down to 61.2. It's only 2 percentage points, but that actually equates to millions of people if you actually do the math and look through it. And so there will be a lot of people retiring. And that's one of the reasons, right? Retirement being moved up for this now participation rate, which doesn't seem to be moving higher than the 61.6%. It's been stubbornly, persistently lower than our all-time high. And we anticipate that to be the case for quite some time. One, the retirement move date moved up. Number two is the gig economy versus the service sector. Let me explain what I mean. There's a lot of side hustles out there, right? There's a 5-year adoption is what they're saying in the world of technology from you and I and everyone out there, because we were home for the last 20 months. So we essentially learned technology at a 5-year pace super quick in 20 months. And so in addition to that, there's also the social media world. There's also the internet world. There's different ways of actually making money besides the traditional service sector, right? And obviously you and I could agree that if we go to a restaurant, service is kind of suboptimal at this moment in time, simply because of all the restrictions and all the healthcare concerns. We get it. And a lot of people haven't been out and about for quite some time, and it's even hard to communicate through a mask when you're at a restaurant, and let alone if you're in the back cleaning the dishes. And a lot of those people have adopted sort of technology, and through the internet and technology, they've found additional ways to make supplemental income. That then is putting into pressure on the labor participation, right? Not many people, like if you have a small business owner, even everywhere around here in Palm Desert, California, if you're a restaurant, you have a help wanted sign and you're so looking for somebody. But again, if you're making more money staying home and learning how to do it through the gig economy one way or another, there's no way you're going back to wash some dishes or even sub some tables, especially in this world of COVID in every variant every day, right? So We are going through what's called a technological revolution. And like we saw with the industrial revolution, we saw the agricultural revolution through the history of society. We're going to look back, and history is going to actually show that this is a technological revolution. And so businesses are just going to have to go through it. And unfortunately, if you do find a business or a service or a restaurant that has great service right now, literally that's like the top. That you could crush it. That's why I've spent so much time with our team here at Blanke, Schein Wealth Management, making certain that we do everything for our clients, and we're there for you, and we're proactive in everything we do. Service is key and paramount, and literally is the hallmark of everyone's business. And those that have it, second to none. Again, we just hired 2 more team members, and we're excited to announcement in the few days to come, because we want to serve you and create that element of value add and make your life every step of the way easier and easier and easier. And that's our job. But again, the businesses that don't understand that are those businesses that are going to fall behind. And ultimately, the gap will then become even larger from this point forward for those business owners that understand the opportunity that lies ahead. And that's one of the reasons is the gig economy versus the service element. And again, service, if you could do it right, you're like head and shoulders above everyone else. And finally, the personal spending rate. That's one of the reasons why we're seeing the Great Resignation. Again, people aren't going back to that service job simply because, not only because of the enhanced unemployment that literally in let's say September of this year sort of stopped from either state or federal levels, depending upon where you live. And then the government-assisted enhanced stimulus checks. There potentially could be another round of that. I know there's always talk of that, but ultimately the personal savings rate has declined, and we're seeing that if you look at the Fed model, and we follow that as well. And so that will actually help potentially make this rate go a little bit higher, but I think it's going to be a long time before we see the all-time high on the labor force participation rate. Again, there's also people that have side hustles, right? The independent contractors. I don't think the labor statistic model from the U.S. government has caught that and can capture that inclusively with all the different sort of side hustles that people can take advantage of in this new gig economy. So we're going through the revolution. It's here, it's real. That's why we position our portfolios accordingly at Blanke Schein Wealth Management, and tech is a huge portion of that. It's also helping abate across the spectrum of inflationary pressures, right? Technology can help solve a lot of those problems long term. Short term, we're going to have high inflation rate as we're seeing. We're going to have labor shortages right now as we're seeing, and we're going to have adoption of technology, and businesses will solve for this, but we're in the middle of it. Now, again, that's why we're positioning portfolios accordingly, because there's always a bull market somewhere, and this is where we're taking advantage of. But if you see sort of the headlines on labor force participation rate or initial jobless claims, the take-home point here is that we've got a strong, healthy economy, and we've got a lot of people that if they want a job, they can find a job. They might have to get some new skills. They might have to transition new technology. But the reality is that we're still on a fundamental solid ground as it relates to the economy. That's a good thing for stocks. That's a good thing for U.S. participation here. And it's a good thing on a go-forward basis. So thanks for watching our Friday Insights edition. I hope you learned something. And again, you could always share, like, and subscribe to friends and family. Really appreciate it. And again, we're getting closer to Christmas, and happy holidays. You guys take care and have some fun.